Hello, everyone. Hello, everyone. I'm Lizette Gabriel, and I work as a librarian in the Business and Economic Department here at the Los Angeles Public Library. Welcome to today's presentation called Credit Reports and Scores and LA Saves. This program is part of America Saves Week and is brought to you by the Alliance for Economic Inclusion and LAPL. Today's presenters are Julie Deppner and Rihanna Rodriguez. They will discuss credit reports and scores, building productive credit histories, and repairing and improving credit. Please send us your questions throughout the presentation, and we will have a Q&A session after the program. I now like to pass the presentation over to Julie and Rihanna.
Hello, everyone. My name is Julie Deppner. I am a proud member or volunteer of the FDIC's Alliance for Economic Inclusion, and I'm also the vice chair of the Credit Builder and Homeownership Working Group. On to slide 2, I will read the mandatory disclaimer. This presentation represents the views of the speaker and not necessarily those of the agencies they represent. This presentation cannot be reproduced or distributed by a third party or on a third party website without prior authorization. Slide number 3. Today, we're going to cover credit reports and credit scores. Moving on to slide number 4, section 1, we will first talk about credit reports, and then my colleague Rihanna Rodriguez will cover the credit scores section of the presentation. Let's begin with credit scores and how the information of your credit report can affect many areas of your life. So generally with the other presentations, we have interactive polling and ask people whether or not they've pulled their credit reports in the past 12 months or if they've requested credit reports in the past 12 months. Generally, not very few people do. But this illustrates why this course is so relevant and important, especially at this time. It is a good idea to pull your credit report at least every year to see what is reported on there, what your score is, and so that you can dispute any inaccuracies that may be reported about your payment history or any new debts that you don't recognize. On to slide number 5. Here we have a key takeaway. Your credit history has a significant impact on your life. It can affect your access to loans, but not just loans, but also to jobs, housing, and insurance. Understanding your rights helps you to know how to protect your credit history. Next slide, please. On this slide, you can see what is and is not in a credit report. On the left side, we can see that your name and aliases or other last names that you have used are included in your credit report. Your credit card payments are included in your credit report. Bankruptcies are also included on your credit report. Chapter 7 bankruptcies stay on your credit report up to 10 years. And a Chapter 13 bankruptcy will fall off after 7 years after the filing date. Your student loan payments are also included in your credit report, and credit card limits, as well as outstanding balances as of a certain date. On the right side of your slide, we can see what is not in your credit report. Your age is not, but your date of birth is so. Your income is definitely not in your credit report. Your cell phone plan payments are not included in your credit report. Debt to income ratio is not in your credit report. Your income isn't on there, so definitely no debt to income ratio. Your savings account balance is not on there. And your debit card purchases are also not included. And if we think about it, that makes sense because debit cards are tied directly, they draw directly from a checking account. So it's not a credit facility, it's not a line of credit like a credit card. So that's why they're not included. On to slide number 7. So credit reports are documents that list your identifying information, such as your name and address, public record information, such as bankruptcies, judgments, tax liens, and foreclosures, and also seriously delinquent child support payments. Still on slide 7, as we continue to review what is contained in a credit report, there's a separate section for accounts that have been assigned or sold to collection agencies. When a creditor decides that it is no longer worthwhile for them to try to collect payments from you, they may engage a collection agency to try to collect the debt. Of the various credit report sections, the credit account section contains the greatest amount of information. It includes information about current and closed loans, the types of accounts that you have, including monthly installment accounts, such as auto loans and mortgages, and revolving accounts like credit cards, where you can advance money and pay it back and then advance money again up to the credit limit. It also includes the amount of credit on the accounts, and this is, the amount that is actually approved by the credit card for the line or the line of credit. The terms of the arrangement and the payment amount due are also included in the credit account section, as well as account balances, your account payment history, which is often called the payment pattern, the date the account was opened, and, if applicable, the date that the account was closed. And of course, this section includes the name of the creditor. Okay, still on slide 7, the last bullet, covering your applications for new credit and other inquiries. When you apply for a new loan or a credit card, the creditor conducts a hard inquiry, which provides a full access to your credit report in response to your application for credit, and it does affect your credit score. I can tell you from personal experience as a recovering or a former loan officer that when there are prior hard inquiries on someone's credit report, it is like a red flag for lenders. Lenders that view your credit report and see prior inquiries from other lenders consider that you may be in the process of applying for credit with other lenders, and they take into account that this may impact your repayment ability for the loan that you apply for with them, since you may have new additional payments that are not currently reflected in your credit history. As a result, this may impact the lender's credit decisions. So, in addition to impacting your credit score overall, it may also impact your ability to obtain subsequent loans, even if you have the ability to repay them. Now, for a soft inquiry, that provides limited access to your credit information for an organization that is looking to offer you new credit, or a creditor with whom you already have an account and they're just monitoring your continued creditworthiness. So a soft inquiry does not affect your credit score. And you pulling or requesting your own credit report will not show as an inquiry, and it does not affect your credit score. So that's important. Moving on to slide number 8, we can see here that there are 3 primary nationwide credit reporting agencies: Equifax, Experian, and TransUnion. The companies that maintain credit reports are known as credit reporting agencies, credit bureaus, or credit reporting companies. If you have a credit history, you likely have at least these 3 separate credit reports, one from each of these nationwide credit reporting agencies. You have the right to see these reports, which we will talk about a little bit later, but this is information about you, so you have the right to see this. In addition to the 3 nationwide credit reporting agencies, there are also specialty consumer reporting agencies. They provide reports that help other companies make decisions about providing consumers with products and services. For example, accounts in financial institutions, like for example, check systems is one of those. Other reporting or specialty reporting agencies, or for employment or rental housing or insurance or cell phone plans. LexisNexis is another example of these specialty credit reporting agencies. Some of these companies may actually have information about you. On slide number 9, it is important that you know about your right to free credit reports. Prior to COVID, you had the right to one free credit report every 12 months from each of the nationwide credit reporting agencies that we talked about. And the best way to do this is to go to annualcreditreport.com. That is the official site to fill orders for these free credit reports. There's also a toll-free number that you can use there. Okay, on slide number 10, since COVID, you now have the right to additional free credit reports. Now you can even get one free credit report every week from each of the nationwide credit reporting agencies, the same ones, Equifax, Experian, and TransUnion. So the credit reporting agencies are making these reports free through April of this year due to COVID. Otherwise, it is just once every year, as we discussed in the previous slide. But again, simply go to the annualcreditreport.com to obtain your credit report. If you are one of many Americans that are struggling to pay your bills right now because of the COVID crisis, here are 3 things that you can do. Number 1, contact the companies you owe money to. You can ask them if they can postpone your payment, if they can put you on a payment plan, or if they can grant you a temporary forbearance. Number 2, you should ask, you should also check your credit report regularly to make sure that what is reported is correct, especially any new payment arrangements or temporary forbearance that you may have negotiated. The CARES Act that was passed by Congress a couple of years ago requires your creditors to report these accounts that you made these arrangements with as current and not delinquent or late. And number 3, you can fix any errors or mistakes that you find in your credit report. Simply notify the credit reporting agencies directly. That's all you have to do. On to slide number 11. Watch out for imposters. We've been talking about the annualcreditreport.com up till now, but there's others out there that advertise free credit reports, credit scores, credit monitoring, but they are not part of the legally mandated free annual credit program. And guess what? They're not always free. So often free services convert to one that you end up having to pay after a trial period. So after the initial trial period, they start charging you. So the only one that we really recommend that you go to is annualcreditreport.com. That one is truly free. Okay, on slide number 12. Even after the temporary weekly allowance for COVID lapses, you may have a right to additional free credit reports, and now, before, during, and after, if you receive public assistance such as SSI, SNAP, Social Security. If you are unemployed and looking for a job, you also qualify for more frequent credit reports. And if you are a victim of identity theft or financial fraud. So if you were denied credit, service, rent, or employment, and it was based on information contained on your credit report, you can also get another free credit report. Okay, slide number 13. Credit reporting and your rights. Why is it important to know about your rights in credit reporting? Why? Because knowing about your rights can save you money. It allows you to be able to determine if your rights have been violated. If you understand your right to dispute incorrect or outdated information, you're more likely to take action and improve your credit history and scores, which can potentially lead to more favorable credit or service agreement terms. Armed with this knowledge, you can take steps to protect your credit history, and you can take steps to improve your credit history and scores. On to slide 14. The FCRA, or the Federal Credit Reporting Act, is a federal regulation that provides you with rights related to credit and consumer reporting. Highlights. If anyone who uses information in a credit report to deny your application or to offer you less favorable terms for credit or insurance or employment than what you applied for, then they must tell you that they did so. You have the right to dispute incomplete or inaccurate information. You can just contact the agency and dispute it. Credit and other consumer reporting agencies must correct or delete inaccurate, incomplete, or unverifiable information within 30 days after they receive your dispute. And finally, on slide 15, we have another key takeaway. Remember that your credit history can affect your access to credit, loans, jobs, housing, insurance, and other services. Understanding your rights helps you know how to protect your credit history. So I understand we have reserved time at the end of the presentation for questions. So with that, I am pleased to pass over the virtual mic to my friend and colleague, Rihanna Rodriguez. Rihanna?
Thank you, Julie. So I'm going to go over the next two sections for you. It's going to talk about credit scores and then also how to maintain your credit history. Next slide, please. So in this section, you're going to learn that you can take steps to improve and manage your credit scores. And this would include any type of bill payments and ensuring that you're paying your bills on time. Next slide, please. So what is a credit score? We all have more than likely had access to Credit Karma, or maybe if you have a banking account, they have provided free credit scores for you and you clicked on it. So you probably have seen your credit score. Generally, like Julie was saying at the top of the presentation, this used to be in person before COVID, and we would have individuals raise their hand. How many people have pulled their credit report? And you'd have people raise their hand. And then you would say, how many people know your credit score? And it would be surprising that the majority of the class would raise their hand and indicate that they have seen their credit score. However, they had never seen their credit report. So what is your credit score? Well, it's a number, and it's a number based on the information that is inside your or on your consumer credit report. It also predicts your payments to determine if you would be paying your bills on time and if you would pay your debts as agreed. Also, people with higher credit scores are likely to present lower risks to creditors. And this would be similar to what Julie was discussing earlier when she was talking about ability to get loans. Next slide, please. So who uses your credit reports? Financial institutions, more than likely your local institution that you bank with, your local credit union, anybody at this particular point. So if you're going to go in and look for a loan, they're going to use your consumer credit report. Landlords, utility companies, cell phone companies, insurance companies. In some states, they do use it, as well as employers in some states. So if you have been looking for employment, you may have seen where they have provided you your background check. That background check may provide not only some information that they pulled potentially from a maybe criminal aspect, but also you would see that there is some credit information in there. And also some state agencies or other affiliations, affiliated organizations, they do use your credit report. Next slide. I really enjoy this pie chart. I think it gives a really great example of what makes up your credit score. So this particular pie chart does discuss the FICO score model. I just want you to know that if you happen to have Credit Karma or you've used Credit Karma, they use Vantage, which is a different credit scoring model. It's a different model that puts out that number for you that says, your credit score is 720 or 750. It's Vantage score versus FICO. Generally, they're the same in terms of the components that would make up the credit score, but each of them have a different secret sauce. So, or if you've heard the word algorithm, which I think a lot of us have at this point, especially with all the other fun things that we do online now, it's all algorithm based. So in this instance, 35% of your credit score would be regarding your payment history. So how often are you paying your bills? Are you paying your bills on time? Are you paying them as agreed? Do you have any late payments? And this is if you happen to had during the top of the pandemic and maybe you were part of the industries that they had to close their doors and maybe you weren't able to make a credit card payment. So you had that 30-day late. That would be part of your payment history. The amount owed is 30%. So that would be how much credit do you have to how much do you owe your creditors. I'm going to go into a little bit more detail in a couple other slides, but in this particular instance, I just wanted to point out that in the event that you say have a total of 3 credit cards and each one of them have $1,000 credit line, so you have a total of $3,000 in credit. If you have all 3 maxed out at the $3,000 mark, more than likely you'll see an impact to your credit score. 15% of your credit score consists of the length of credit history. So that would be any of the new credit that you've applied for. So when Julie was talking about inquiries, that would be any new credit that you actually receive and you have that is reporting on your consumer credit report, or any lengthier credit cards or anything. Personally, myself, I think the oldest credit card I have is a Macy's credit card. I got it when I was 18 years old. So it's been reporting on my credit history now for over 20 years. So that's one of those things that is definitely going to be positive as long as you pay it on time. But that is something that would make up your credit score. Also, your credit mix. So 10% is credit mix, and that would go, like I was talking about in terms of your credit cards or car payments, your mortgage payments, that makes up 10%. Creditors don't like to see that you're heavy on the revolving credit line, which would be your Kohl's credit cards and your Macy's credit cards and your Visa's credit cards. They like to see that you're kind of rounded out. So if you do have any loans that are fixed. So do you have a personal line of credit that you're not able to use over and over? Maybe you took out a loan for $10,000, or maybe you have student loan reporting. That would be considered credit mix. And new credit is 10%. So again, back to Julie's comment in terms of hard inquiry and soft inquiries. Are you looking for credit? And how many times have you had your credit pulled recently? 10% does make up new credit, and any type of inquiries or attempting to get new credit would make up about 10% of that score. Next slide, please. So keep talking credit scores, credit score. What is a good credit score? I'm going to start with the good. I don't really want to get into the orange scores. We're trying to get you into the yellow mark and that green mark and the very green mark. So a good credit score represents 670 to 739. Very good score is 740 to 799, and an exceptional is 800 to 850. So good score. If you're looking for a home, you're probably going to get approved. You might not get the rate you're looking for. They might ask you for a larger down payment. You may find that your PMI, which is your mortgage premium insurance, if you don't have 20% to put down, you may be a higher risk. So they may add some additional PMI onto your loan. Because it's all based on risk. Very good. When you go in and you're looking for that new car, you're probably going to get a really good rate. However, if you're in that exceptional mark and you see those advertisements on television where Honda is saying, come in right now, you get 1.9%, the best, when you look at those itty bitty little tiny letters that are on the screen, it's for exceptional credit. So that's who's going to get that 1.9% at that really great rate, and or the shorter term if that's what you're looking for. Next slide. So I keep talking about credit scores, but what if you don't have a credit score? Or what if you don't have anything that reports on your consumer credit report? You're considered credit invisible. And in this instance, you may have a harder time getting a loan, apartments, cell phone plan, jobs, or utilities. And I personally had this experience myself. I was 18 years old. I'm pretty sure lots of us have been 18 at some point. And maybe you went to college or you were looking to move out of your parents' home and you were attempting to get an apartment. I didn't have credit. And when I was going out, I noticed that either I was getting denied apartments that I absolutely loved, or the apartments I was looking at that I did get approved for, I had to put a really large security deposit down, and the utilities. So I moved into my apartment. I was super excited. I needed to get everything put in my name. And then come to find out I had to pay $150 to turn the water on. That just was not just to have water every month. That was that wasn't the bill. That was me to actually just get services. Or I had to put a large payment down for cable. And this was a long time ago. So before your direct TVs and all the other fun smart TVs, I had to put on a really large payment to actually get a cable box. And so it's not necessarily fun, or you don't get really great services when you don't have credit or you happen to be credit invisible. But just to let you know, the banks are now aware of this and they're really trying to work towards providing other services or loan products to individuals that may potentially be in this credit invisible, or somebody who has very little credit reporting on their personal credit report. Next slide. So I just want you to take away from this section that there are steps that you can take to improve and manage your credit scores, and this would include paying your bills on time and as agreed. Next section. So in section 3, we're going to talk about how to build, repair, and maintain a productive credit history. Next slide. So your credit history does not have to be your credit future. I love this. Definitely one of those things that it sounds very inspirational. So currently, if you happen to be credit invisible, have very little credit, or you're looking to improve your score, just let you know that you don't have to be credit invisible and or have a low credit score. Next slide. So what is productive credit history? Next slide, please. Having a productive credit history is basically being proactive. So building credit, maintaining credit, and ensuring that you're checking that consumer credit report that Julie had talked about earlier. So how do you build credit? What if you are credit invisible, or if you do happen to have a low credit score? How do you build credit? You can get a secured credit card. A secured credit card is generally cash secured. They are usually, you can do 200, 300, 400. You go through the credit process as if you would be applying for a regular credit card. However, like I said, it's cash secured. So you would have to put a deposit down, and then you get to draw on the deposit that you put down for the credit card. So let's say, for example, you put down a $500 deposit, you have a $500 credit line. And so if you happen to not pay on time, or happen to not pay as agreed, they would, the bank or wherever you got your secured credit card, they would take the dollars that you had in that deposit as security. So they would use that and they would hold it until you pay on time, or you pay the balance. And you also want to ensure that it does report to the credit bureaus. There are instances where there are secured credit cards that do not report. So when you get all of the language and you have all of those disclosures and they're boring and you don't want to read them, I promise you there's good information in there. So it's always important to kind of glance through them and read through them and ensure they report to the credit bureaus, which generally speaking, you want the larger credit bureaus. So your TransUnion, your Experian, and Equifax is where you want it to go. You can get a credit building loan, which is similar to a secured credit card. It's going to be cash secured, CDs secured, or asset secured. And it would help you, basically it's a similar concept. If you don't pay, then the banker or they would put a lien on your assets, or they would take the deposit that was securing the loan. And a credit building loan, unlike the secured credit card, it's not revolving. So there's a fixed period of time, a fixed interest, and then you would have to pay that back, say, in 2 or 3 years. Becoming an authorized user on an account. This is a fantastic way of getting credit. So if you have a family member or somebody that has a credit card that would be willing to put you on as an authorized user, that would be fantastic. Also, make sure that it reports to the credit bureau. I do believe in Experience, there are some credit reports or credit creditors, excuse me, that do not report the authorized user. So you want to make sure that they are reporting. So in this instance, the only example I would have is my son. He is going to be 21. And when he turned 18, I added him on a credit card. And he actually has some credit reporting now. So it's not a lot, but it's enough that it has helped him kind of push himself where if he wanted a new cell phone, well, he doesn't have to look to me to do the cell phone for him. He can do it himself. Get a cosigner. So if you're going in and you're getting a car, I don't know who's sat in front of a car salesman. They stress me out. And, the first thing they're starting to talk about is payments and interest rate. And if they say, oh gosh, we pulled your credit, you don't really have much credit, it's going to be 24%. Do you have a cosigner? You might want to consider getting a cosigner so your interest rate's not so high. Apply for a credit card or at a store or a gas station. Those are usually easier to get because the credit line is much smaller. So if you go into your Arco, I don't think Arco has one, sorry, Shell, Mobile, Chevron, they'll have like a $200 credit line for you. And those are great ways to start and build your credit. Or making larger down payments. So if you're going in to buy a car, and I know it's tax season and we're all ready to get out and make some big purchases that we've been waiting for. So if you're looking to get that new car, you may want to consider putting a larger payment down. Next slide. So maintaining credit, how do you maintain it? So now you've went out and you've got this new car, or you got that Macy's credit card or that gas card that we're telling you to go look for. How do you maintain your credit? Pay your bills on time. Sounds simple enough, right? So paying your bills on time and making sure that you paid as agreed. And the best way to do this is if there's a minimum payment that you are supposed to pay on the 15th and the minimum payment is $35, you get it there by the 15th and you make that minimum payment. I recommend making more than the minimum payment. However, if the minimum payment's all you can afford at that time, it's better to pay the minimum payment than not make the payment at all. And continue to pay down your debt balances. So this is kind of where I was talking about, your 30% in terms of the amount owed. So you don't want to have too high of a credit balance. So if you have that $1,000 credit line, you don't want to charge $1,000. You want to make sure that you keep it below a certain threshold. So that's why I always recommend pay more than the minimum balance. If you do happen to have a credit card, you may have seen in the statements now, it will tell you if you pay this dollar amount, you'll have it paid off in 5 years. Or if you just pay the minimum balance or the minimum payment, it'll take you 20 plus years to pay it off. I'm not recommending that you pay the $500 or whatever it's recommending to get it paid off in 5 years. I am though recommending that you want to make sure you're paying a little bit more than your minimum balance or your minimum payment, because what's going to happen is when they take that payment, there's going to be a percentage that goes to interest and then a percentage that goes to principal. So then it takes a really, really long time for your principal to get down where it looks not as aggressive. So keep the proportion of your credit you use low to your credit limits. The threshold that we usually like to talk about in the industry is about 30%. So going back to that $1,000 credit line, if you have a $1,000 credit line, you went through the line at Best Buy and you're buying something new and they go, hey, do you want to apply for that credit card? And you're like, yeah, I want to apply for it. And you get approved and they say, oh, you can put this purchase on there. If it's, you get approved for $1,000, but that new TV you're purchasing is $600, maybe you want to still put $300 towards the television and only charge $300. The threshold's usually about 30%. And don't apply for too much credit. Don't go out and, like Julie was indicating earlier, don't apply, because you will end up becoming higher risk because creditors are thinking that you're out there looking for credit. And as Julie stated, they don't know at this point that, if maybe one Bank of America has pulled your credit and Wells Fargo has pulled your credit and Chase has pulled your credit. They don't know if you were approved and if you took a line of credit with them. So you do look riskier. And also check your credit report regularly and dispute any errors. As Julie was stating, know your rights and ensure that you're looking at that and dispute any errors that you know. And keep good financial records. So if you're somebody who does happen to pay in cash, or you do money orders, and you're not a super fan of doing auto pay or other things along those lines, you still write checks, make sure that you're keeping records. You don't want to find yourself in a situation where you sent a check out for payment and maybe it got lost in the mail and you don't have a record of that to provide to the creditors. Next slide. And always get help. I think that is probably one of the most important things that somebody who is responsible and wants to be responsible and wants to maintain good credit and productive credit history is to get help. If you find yourself in a situation when you're having a difficult time making payments, contact your financial institution. I have a great example. My mother-in-law at some point was having a really hard time. She was on a fixed income and she charged up a credit card. I recommended contact the credit card company. She was definitely like, absolutely not. I'm going to keep paying. I'm going to keep paying. I'm going to keep paying. And then she started identifying that it was just too hard for her to do that. She did actually take my advice. She contacted the creditor and they were able to take the credit card, and she didn't have access to it anymore. So it was not something she was able to continue to revolve or have access to. But what they did is they took her credit balance, and they said, okay, you have 5 years now at a 2% fixed interest rate to get this paid off. And that alleviated so much financial stress for her that even though she didn't have access to that credit, it helped her in the long run because she was able to get that credit balance paid down. There is nonprofit consumer credit counseling services. So just simply the fact that you're sitting in one of these webinars lets me know that you're ready and prepared. If you have problems or you're having some issues paying credit cards, or even finding that you feel like you're drowning in debt, sit down with a credit consumer counselor. Always nonprofit. As Julie stated, there's imposters. You don't want to find yourself sitting down with a credit counseling agency and them asking you to fork out $500, $600, $1,000, especially if you don't have it. If you're sitting in front of them, you more than likely don't have it. So make sure you're looking for nonprofit services. The housing counseling agencies provided by HUD. So the Department of Housing and Urban Development does provide for credit counseling agencies for housing purposes. If you've ever happened to be late or bought a home and you're signing documents, you'll note that there's credit counseling agencies. They're also provided on HUD's website. And they're also provided on your lender's website. So if you're having problems, the lender does provide these services for you so you can try to prevent foreclosure. Financial education nonprofit organizations are always great to sit down with, and that they can help you with budgeting. And again, it's free or very low cost. Certified financial planners are also another great resource. Next slide, please. And again, I just want to make sure that I hit home. Make sure that you're aware of credit report scams. I don't listen to the radio anymore, and I don't recall why I happened to have the radio on, but I kid you not, on the way when I was driving, it took me almost an hour to get where I was getting, and I heard 2 or 3 of these rapid credit repair. We can get your credit repaired in up to 30 days. We can have it ready for you in 90 days. We can clear all the negative stuff off your credit report. Watch out. They expect you to pay very large upfront fees. They promise to erase bad credit and remove things that are actually accurate. So if you have liens on your credit, if you have tax liens or other things that are definitely there because you did unfortunately have an issue where you were unable to pay or something did happen, they say, oh, we can get rid of that. They can't. And they will do exactly what you do. If you actually follow what Julie recommended earlier, going through your rights from the Fair Credit Reporting Act, you can go on to any of the national credit reporting agencies and you can file a dispute. If you see something that's inaccurate and you have access online, you can go on and you can click it and it'll say file dispute. It's nice and big letters, file dispute. You click on it, you file the dispute, you type why, and it takes you through several screens and how to dispute something. And then you can send it off and you can go through that process yourself. It's not as timely as it used to be. Before, you have to write tons of letters, you'd have to mail them off, you'd have to get them certified. It's much easier now because it is accessible and is online. If you don't have the ability to get online, then yes, you would have to do the mail-in process, but it's still something that is available for you. And these credit report scams also try to tell you that you can get a new identity. Don't do it. don't try to go get a new identity. And again, they want you to pay them upfront. And usually the fees are very, very large. And they definitely do not tell you about your rights. Next slide. So again, about being responsible and proactive, protect your credit history. So how do you protect your credit history? If you feel that you've been a victim of identity fraud, make sure that you put in a fraud alert. Maybe you had lost your wallet, or maybe you were going out to open a new account somewhere and somehow, some way you misplaced your social security card. File a fraud alert. Make sure you get onto those national reporting agencies, the large ones that Julie talked about, so Experian, TransUnion, Equifax, and file an alert. If you're active military, there are active military alerts. The thought process behind it is, if you're active, you're not looking for credit. If you're active and you're on duty, you're not going out looking for a new house or a new car. They have extended fraud alerts, and credit freezes and credit logs. So I'm sure that a lot of you have heard of the different breaches that have been going on. I think Equifax's, was it 2 or 3 years ago now? And that was, I mean, all sorts of people had their information impacted. All 3 of the major credit bureaus now have you as an individual, if you go on and you pull your credit report like Julie recommended through annualcreditreport.com, what it does is it takes you to each of the 3 individual credit bureaus' websites. And at that point, you would create an account for each one of these major credit bureaus. And when you create the account and you go online, there is little toggle switches that you can click, and it freezes your account. Click, it unfreezes your account. Credit lock, you click and it locks your credit. Click, unlocks your credit. And this is great, especially if you happen to have trips planned, or if maybe you have some extended stay. I do have family members that do leave the country, maybe for extended periods of time. I even had an old coworker of mine that would leave the country for 6 months out of the year. While you're gone, you don't want somebody happening to apply for credit, and maybe you don't have access to the Wi-Fi as often, or maybe you're not checking your credit as proactively as you think you did when you were home. You just want to make sure you have the ability to lock that, and you're aware of those. Next slide, please. So remember, your credit history does not have to be your credit future, as long as you are proactive in monitoring and watching your credit. Next slide. So there's some websites that we provided to you. So some of the information that we spoke about today will be on the ftc.gov's website. Some of it is also on the consumerfinance.gov website. And again, annualcreditreport.com. Do not do free annualcreditreport.com, because it is not free. But www.annualcreditreport.com is free. Next slide. So we challenge you. What are you going to do today? How are you going to do it? And are you going to share your plans with anyone? And if so, who? And the reason why we're saying this is because what we found is people that talk about this tend to be more accountable to themselves and or accountable to other people, especially if they say, I'm working today and I'm going to go out and I want to improve my credit score. And you start talking about it, or maybe even posting it on social media. It's definitely something that helps and really helps and holds you accountable. So next slide. So thank you for listening to credit, but we're going to also talk about LA Saves. So our LA Saves, start small, think big, set a goal, make a plan, and take action, lasaves.org. Next slide. So good credit management is important. It saves on interest rates and late fees. It saves with, you save with healthy credit scores, and you can reach financial security. Next slide. You can save, and it helps you reduce debt by saving. Next slide. So plan to reduce your debt. Get out of debt is the number 3 goal savers select when they pledge to save. Large consumer debt can take away from your savings and building wealth. And any planning, discipline, and patience, almost anyone can reduce debt and start accumulating wealth. And I think this has been on everybody's mind recently. If you go on social media, if you hear anything through even webcasts and different podcasts, etc., they're all talking about equity. They're all talking about financial wealth, and they're all talking about how do you build generational wealth. Definitely at this point, pledging to save and becoming part of the LA Saves program will definitely help you in that goal. Next slide. So LA Saves and America Saves and LA Saves is a campaign that's managed by a nonprofit, the Consumer Federation of America. It seeks to motivate and encourage and support low to moderate income households to save money, reduce debt, and build wealth. The research-based campaign uses principles of behavioral economics and social marketing to change behavior. And I think that's so important. Next slide. So take the pledge. Take the pledge. All you got to do is put in your name, set a goal, and what you're saving for. Make a plan, the amount that you want to save per month, and the number of months. And the amount does not have to be large. The last time I did it, I believe I put a $20 mark. I believe there is as low as $5. And make sure you're keeping in touch. So email address, telephone number, your zip code, and sign up to receive text messages and advice. Next slide. So again, make a plan. So this is the example of what the page would look like when you go on and you go to set your goals. Next slide. Do you need to open a bank account? Opening a bank account can be one of the most important steps you take towards reaching your financial goals. And why? Because it's putting money in an FDIC insured bank, and it can offer financial safety, easy access to your funds, and savings from check cashing fees and overall financial peace of mind. And even some of those prepaid cards, there's lots of fees associated with those. Next slide. Banks participating in a bank on offer, they offer low cost accounts, low monthly maintenance fees, minimum opening deposit requirements. There's no overdraft fees, non-sufficient fund fees, no ATM fees for in-network ATMs, and the list goes on for the banks that are providing the low-cost accounts. And there is a website that is attached to this, and that will provide you a list of banks that are providing this particular account that are partnering with Bank On through LA County. Next slide. And so thank you for your participation, and let us know if you have any questions. Thank you.
You guys can't hear me if I don't unmute myself. All right, so thank you, Julie, and thank you, Rihanna. All right, then. So it looks like as I look at the comment part, we do have a question. And it was actually replied to by my coworker, but I'm going to repeat it just in case. So, can you please provide the names of the speakers and the organizations they work for? So, again, both ladies are very good and knowledgeable. So, thank you both. And I just want to repeat that today's presenters are again Julie Deppner and Rihanna Rodriguez from the Los Angeles Alliance for Economic Inclusion. All right. Okay, so here we go. What are some of the questions we're getting? Okay, here we go. Here's the first one. How often should I pull my credit report? And I'll let either one of you decide who takes it.
I'll take it. Thank you. Since I think that was really under my section. Just like pretty much everything else, the answer is it depends. It depends on your situation, right? So currently with COVID, if you're one of the millions of Americans that are struggling with payments, you should take advantage of the fact that right now you can pull it every week. And especially if you've been able to talk with the creditors, the people that you owe money to, and making sure that there's forbearance or a certain payment plan to make sure that they're not reporting you as delinquent, that you're not paying as agreed in the initial terms. You renegotiated, and based on the CARES Act that Congress enacted a couple years ago, back when COVID first started, they're required to report you as current. So that's really important. if you're not struggling, if you still have your job or you don't have those issues for COVID, I mean, again, it depends if you, maybe if you're unemployed, or maybe if you have, you're working, but you also have Social Security income or it's others. You can take advantage of getting additional credit reports, or if you apply for a loan or for an apartment or something, and they turn you down based on information that they used from your credit report, you can get one right then just based on that information. So I think if that happens, it would be important to see it, because that way you know what is the negative information that's impacting my ability to get a loan, or to have an apartment, or even for a job. So I guess that's the answer. It depends.
Depends. All right.
I just a side note, I pull mine periodically, and as Julie was saying, at the top of the pandemic, CARES Act, and there were all sorts of other things that were enacted. Creditors really were proactive with helping individuals. But I thought it was fantastic. I happened to pull my credit because I was looking for a new home, and so I looked it up, looked up my credit, and I found out my mortgage company decided to indicate on my credit report that I was asking for COVID relief, and I had not asked for COVID relief. So that's an instance where that is possibly something you can dispute. So I don't know what happened or why that particular mortgage servicer decided to say that. But yeah, and that could have impacted, because they creditors keep saying it doesn't impact. Well, if they see that you have asked or requested for COVID relief, their first question is going to go, why? So I wanted to make sure it was off. So you definitely want to make sure you're checking your credit report periodically. So I would say at least quarterly.
Wow, that's a great example. But I do want to mention, based on the credit reports, how many times can you request it without it affecting your credit score?
It does not affect your credit score when you pull your own consumer credit report.
Okay, good to
Great
know.
question, Lizette. Thank you.
All right. So next question here. Does pulling my credit report cause an inquiry?
It does not. No.
Okay, that's an easy one. Next one. If I get denied for credit, does that get reported to the credit bureaus? Nope.
No, it does
No,
not.
but you can pull a free credit report.
Right. That's one of the reasons, the triggering reasons for getting another credit report is getting denied for credit.
Oh,
Nobody has to know about it, but you and your banker.
okay, sounds good. All right then. So I don't see anything else popping up right now. Oh wait, hold on. There's actually another question. Can you explain the Bank On program again? So
Did you want to take this one, Julie, or you want me to go through it again?
Yeah, go ahead. Thank you.
Okay, so the Bank On program is essentially it's a savings program, and it doesn't cost you any money. It's free, and what you're doing is you're just taking a pledge that you're going to save. So there's no requirement for you to put money in every single month. It's just really something that is holding your feet to the fire, and you're being accountable to yourself to put dollars aside for savings. Generally speaking, I don't know if the statistics have changed, but I believe that the average household has less than $500 saved. And so this program or this particular platform is allowing you the ability to be accountable to yourself to save money and put money aside every month. So it's not an automatic withdrawal or anything along those lines. It's literally just something helping you be proactive and reminding you. It's kind of like your Alexa setting off some sort of reminder every month or every how. I think I set a reminder every day to do certain things. It's just something like that reminds you that, hey, I did say I was going to put aside $20 a month. So let me go ahead and not do those extra Starbucks this month. I'm going to put $20 aside. And really, that's all it is. So again, Bank On also is different partner banks that LA County has partnered with to provide some low-cost services and checking accounts to you if you're interested in looking for a bank. And it's really to help individuals come away from prepaid accounts, check cashing services, or any of those really hard like payday loans and things that can really cost you a lot of money at the back end.
Okay. Um, I'm not sure, Caroline. There's another sort of quick request to please show the slide on BankOn. I believe it has information and a website. So if it's possible, perfect. There we go. So there's the slide, and please, make sure you go to the right link and whatnot. And by the way, that chart, you can't really see it, but it does give you a nice sort of preview of all the banks that are participating and any cost or fees and if no fees, the type of services that they offer. So it's a great sort of website to go to see the chart. All right, then. So if I don't see any more questions, all right, there are some sort of information on the library side. So as we continue, the last program for America Saves Week is Get Banked, Be Ready for Tax Time, which is tomorrow, February 25th from 12 to 1 p.m. On Saturday, March 5th from 10 a.m. to 2 p.m., we will have free income tax preparation and filing by UCLA through the IRS Volunteer Income Tax Assistance Program. The event will be held at the Central Library, Meeting Room A. So please make an appointment online. Appointments are required, and please be prepared to share vaccine information as well. So the link will be shared in the chat. I believe it's already there. And if there are no more questions, thank you everyone for joining us today and have a great afternoon.
Thank you.
Thank you.
Thank you.